here, but Hart, do you want to go ahead and give a brief overview of yourself and the protocol?
Sure. Thanks, Ryan. Yeah, my name's Hart Lamber. I did work in traditional finance. I worked at the evil vampire squid, Goldman Sachs for 8 years through the financial crisis. So we can talk about that a bit. But I am the co-founder of a protocol called UMA, or UMA, we sometimes pronounce it that way. And what we do is we're a protocol or an infrastructure to effectively create decentralized financial contracts. At a very general level, we could look at it as a new contracting language, a new way to write financial contracts, which I think is really interesting to talk about in the context of institutions and institutional finance. And at a more kind of pragmatic level, we create synthetic tokens. So we're an infrastructure that allows a DeFi developer or user to take a collateral type, a digital asset collateral type, and repackage it into a synthetic token. And yeah, Ryan, I don't know how deep we want to go, so I'll leave it at that, and we'll go deeper as we move on.
Yeah, no, that's perfect. Give a little teaser, and then we can dive on into that. Just a lot of meaty stuff there. But thank you. So, hey, Greg, how about a little overview of yourself and the protocol as well?
Yeah, so I come from a trading background. I was a commodity futures trader for about 6 years at a college. And then I got into the Ethereum space in 2016 properly when we tried to start an ETF that would track the price of Ether. And that was our first professional foray into the crypto space. Naturally, that is still collecting dust at the SEC, but it did give us a lot of insight into the space. And we started a venture firm that was investing in ERC20 tokens in late 2016. The largest portfolio company of ours was MakerDAO at the time. And over the years, we ended up transitioning to working full-time at the Maker Foundation.
Recording in progress.
The Maker Foundation, head of business development for about 4 years until their dissolution just recently. So now I'm working on a new company called RWA Co. And what we do is we bridge institutional borrowers to the Maker protocol. So we to give an example, let's say a mortgage originator is using a warehouse line at JP Morgan. We will help them refinance that line away from the bank and into MakerDAO.
Wow, that's fascinating. You've been on quite the journey, it sounds like. So that's awesome.
Yeah, can you see how prematurely I've aged? Is it?
Yeah.
Is that
the Zoom touch-up's doing great things. Thanks for sharing. Ajay, how about yourself? You give us a little background.
Yeah, I've been in the space for 5.5 years. Currently I'm building out the Ave Arc platform to get institutions essentially first-hand exposure to DeFi and to really bring institutional liquidity into the market. And Ave, as you're aware, is the world's leading liquidity platform, or rather liquidity protocol. And before Ave, my background is, I was building out the consensus Fintech practice back in 2017, 2018, and then the PwC's blockchain business in the UK. And before that, while Hart and Gregory were trying to cause the financial crisis, I was trying to prevent it. So sort of, working in risk at Goldman Sachs, just about the same time as Hart. So yeah, I was just trying to price most of Hart's stuff, which was really difficult to price. Thanks.
Nice. So maybe a crossover in a prior life between the two of you there.
I'm sure I've seen some of the trades.
I love it. Awesome. It's funny how small the world it really is. But that was great. Sanket, do you want to dive on in, maybe give an overview of Polygon and let us know what the current state is?
Sure, definitely. So probably I also probably introduce myself, and maybe then I can just start with the presentation. So yeah, I'm Sanket, and I lead the strategy team at Polygon. Primarily, I work with Sandeep, who is the co-founder on the business side of things. And I've been in space for a long time. Like I started in 2014 as a miner, and then a lot of back and forth. Then initially started with Sandeep when we kind of creating the Matic network, as it was known back then. And yeah, and like at this role, I'm there since the last 7 months. So okay, I think host disabled participant. Can you just give me the rights to share the screen?
Yeah, let's just have the tech team do that. I think we had a similar
Yeah,
item yesterday.
I think who has the rights?
The tech team, just one moment here.
Uh, Can-
Yeah, let's just ping the tech team, see what.
Yeah.
Well, that's awesome. So it sounds like you've been working on a few different things as Polygons evolve from the Matic network to, what Matic network now being one of the flagship products, but there's tons of stuff going on there, right?
Definitely. Ryan, do you by any chance have access? Maybe I can just share you it's just a link.
No, sorry, I'm not the host. It's I think it might be Min's account there.
Should we just chat for a moment, guys, while we get this?
Yeah. Why don't we do that?
Yeah.
And we'll circle back to we can circle back to the presentation because I think everyone's fascinated
Oh, wait.
about Polygon.
I think Sanket's the host now.
Okay.
Look at this. Happening. We just had to say, guys, let's do something else.
Or this is DeFi. We're doing it in prod.
Just let me know when you see my screen.
Perfect. Yeah, this is great. Thank you. Yeah, go ahead and jump on in.
Great. Yeah. So I think before I even begin with saying Polygon, let me take you back to when when we started all of this back in 2017 and 18. I think Sandeep, JD, and Anurag, back then the three co-founders, they kind of set to work on something on this, trying to solve the Ethereum scalability thing. This is back in the day when the only thing that people kind of used to talk about in terms of scaling was the CryptoKitties phenomena. And all of this mass adoption or things which you are seeing right now was not even there. So back in that, they were working on something related to the plasma technology. Essentially, at that time, it was the most promising solution, and they were part of the plasma research group, and they kind of worked on it for a long time. And that is basically the current chain which we have. It's kind of a hybrid of proof of stake and a plasma chain, which was delivered in, I think, around 2019 or 20. And I think that is when it kind of started. Till this time, we were known as Matic Network, and it was a very singular focus to, let's say, make Ethereum infrastructure ready for mass adoption. But I think the way the whole thing spanned out, I think plasma was not the most promising solution in that sense, because since these are all very research things, a lot of other things kind of were happening at the side, primarily as something called as roll-ups, which are something that's kind of a very hot topic right now. So that is the whole landscape of, let's say, how the scaling things were, how Ethereum scaling as a ecosystem kind of developed. And here I think from Matic Network, right, we realized that just singularly focusing on one thing isn't the best way, because eventually all these platforms are kind of being created for, let's say, developers, and developers essentially don't want to spend time, let's say, trying to figure out which is the best solution, what are the trade-offs of each and every one. And maybe, who knows, like something how we kind of started with plasma, but eventually after building 2 years, the whole market kind of changed and there was another solution that was coming up. So it's kind of a very big thing. And I think the best example here would be, I think, Loom network, which a lot of this blockchain games, as you know right now, Sorare, or let's say Axie Infinity for that matter, all of this were kind of building on Loom network, and kind of Loom had to shut down, and a lot of them were kind of were not able to find a good solution. Now, although I would say 90% of them kind of migrated to Matic network back in the day. But yeah, this is the risk which was there. And seeing the whole landscape, we realized that there is no one solution that could win this thing all, and it's kind of a host of solutions or in other words, kind of an aggregation of all these scaling things. And that is when I think Matic network rebranded to, let's say, Polygon, as we know right now. And it has a suite of scaling solutions, of which primarily like the Polygon POS chain, which is the most adopted one and which you kind of see is gaining traction right now. The other one which we recently announced is the Polygon Avail, and Polygon HDK. And like just last week we announced a big acquisition on the zero knowledge side of things, which I probably cover later on in as we go forward with the presentation. So primarily, I think I'll just focus whenever I say Polygon. I just want to be clear, like Polygon is kind of a suite of all scaling solutions, but for the matter of this presentation, Polygon will be basically Polygon POS chain, because that's the current solution which is live right now. So yeah, I think that's the main thing. And in terms of Polygon POS chain, so like the major thing which we like, it's kind of the main features are like very low transaction fees, EVM compatible. That has been one of the major sources of success for us, in the sense, because being EVM compatible gives you a lot of flexibility, since a lot of native developer tooling which lot of developers are already used to, or in that sense even users are used to kind of work out of the box. So that kind of gives you a lot of flexibility, and it gives dApps also much flexibility while they are trying to port things. So that then, and combining all of this creates a very good good user experience, which, let's say, a lot of this like when things go kind of mainstream, a lot of people kind of want that. So right now I think I'm talking about the numbers. I think right now, given with all of this, combined all of this, we have more than around 500 plus dApps. I think at this point even we are kind of we're not able to keep track of like what's happening in this space. But yeah, I think last time we checked, it was more around 500 plus. And we are kind of averaging around 7 million transactions, 6 to 7 million transactions daily, which is roughly, to just put the number into perspective, Ethereum does around 1.2 to 1.4 million transactions per day. So there are roughly around 5 to 6 times transactions on a daily basis as Ethereum, with the current market cap of around $14 billion. So that's broadly what is it. And yeah, and the reason, as I mentioned to you earlier, right, why we sort of kind of did from, let's say, Matic network to Polygon. One was definitely that when we realized that one scaling solution is not good enough, like it's kind of an ever changing space. Till now also it's kind of a very ever changing thing, and the whole layer 2 scaling solution, no one knows what happens. So that is when we kind of realized that becoming an aggregator of sorts is the right way moving forward. Also, in that other sense, the other product which I mentioned, the Polygon HDK, right? So Polygon HDK is basically trying to have a formalized framework, because if you see on a high level, right, what we are trying to do with that is, so Ethereum is the most dominant multi-chain platform, in the sense, like you have so many rollups, so many chains, so many Ethereum folks are kind of coming up, Geth folks which are coming up, right? But there is no formalized framework. So what we want to do with Polygon HDK is sort of give that formalized framework to Ethereum in that sense. So let's say anyone who wants to create their own standalone chains, they can use Ethereum as a base layer, and with the Polygon HDK, they can create a chain around it based on whatever parameters and things they want. So that's the other thing we are trying to do. And essentially it's kind of like just trying to target, because there are a lot of these ETH competitors or ETH killers in that sense, who are trying to take market share from Ethereum. But so yeah, I think scalability, like if once Ethereum kind of scales, I think there is no kind of incentive for anyone else to go to somewhere else. So that is also, I think, one of the major things which we kind of were able to do. So yeah, I think here, in that sense, right, so putting everything now into perspective, right, Polygon, like just a way to give you a mental model, right? So Polygon is like a suite of all scaling solutions. Think of it as kind of the scaling aggregator of sorts, where we have this multiple products under it, of which Polygon HDK, which is kind of a formalized framework to, let's say, use or create standalone chains on Ethereum, like using Ethereum, and you can scale it the way you want. You can choose your own parameters. your own block time, your own kind of consensus, anything of that sort. So that's primarily something, let's say, it could be very interesting for something like enterprise customers. And that's where also this Polygon enterprise kind of comes into picture, where a lot of these things, I think EVA is definitely one of the major ones who are also trying to push enterprises to use or adopt, let's say, public chain. So that's also something there which we can do. Polygon Avail is basically the Polygon data availability chain, because when all of these roll-ups and other solutions kind of come up, right, they have issues regarding the data. So you need a separate data availability layer so that a lot of things can happen off chain and some of the things can happen on chain, and that's how you can like scale stuff. The Polygon POS chain, as I told earlier, is the current live one, and Polygon Hermes. So these are the 5 ones, and hopefully there will be more also. Given our larger focus on, let's say, zero knowledge as a zero knowledge technology as something that we want to focus on. And yeah, I think so trying to just summarize in terms of, let's say, what are the benefit. Obviously EVM compatibility is definitely one of the main reasons, because that helps developers and users kind of have their native experience without much changes to that. Scalability is definitely because we are a scalability platform. The other part is, obviously, we are trying to provide this security as a service, because a lot of things what happens is on that side, right? uh, like we have a set of hundred validators who are kind of like trying to do, and up till now at least we have 100% uptime for the whole POS chain. So in that sense, security is also kind of there. With sovereignty, I think, so Polygon SDK is kind of trying to provide that in that sense. So you have a fully customized tech stack with an interoperability, because like as you can see currently with the bridges which are there, who kind of provide that seamless experience between all at least EVM compatible chains and maybe to other blockchains. And with combined with all of this, you have a very good user and developer experience, which allows everyone to, let's say, like quickly kind of just jump into, let's say, like using Polygon as a scaling solution. So that's been the thing. And just trying to put everything in perspective, what I've been telling you now, like since the time we kind of started in 2017, we then did the IO on Binance. That's when, like in 2020 we launched the POS main chain. And till then I think it was there was not much traction, but since after, I think we rebranded in February 2021, and when majorly I think Aave was onboarded, or Aave becoming one of the major protocols to kind of onboard on Polygon, that is when I think a lot of things kind of started gaining up. And I think that's also kind of when the industry started seeing a lot of this mainstream adoption and the other things. And after that, I think using like Mark Cuban kind of invested, and one of the major reasons why he became investor was he was seeing himself using Polygon each and every day, and that was one of the major reasons like he kind of reached out and asked like become an investor. And like that's when also in June we launched this HDKs, Polygon Avail, and also something called as Polygon Studios, where we want to focus specifically on NFTs and gaming on the Web2 side of things, with a focus on that, getting more mainstream adoption from that side. And yeah, recently last week we launched and acquired Hermes network in around $250 million meal. And as a larger thesis, zero knowledge is something we are very bullish on, and that's what we want to do. And we have committed up to $1 billion from our own treasury to do more on the zero knowledge side of things, because that is what we feel like would kind of unlock the true scalability of Ethereum in that sense. So this is the core team. I think Jayanti is on the technical side of things. Sandeep is he's on the business side of things. Mihail, who joined recently when we kind of rebranded as a from Matic Network to Polygon as a co-founder, and Anurag is also on the technical side and the product side of things. Yeah, I think, and just to kind of sum it up in the end, I just wanted to leave with you on this slide and just to help people understand, because there's some new kind of development which happened recently. So with zero knowledge and with this Hermes acquisition, what we're trying to do is we are trying to be the zero knowledge powerhouse. And in that sense, we want to make sure that we are able to help Ethereum scale, because zero knowledge allows you to do a lot of things which, let's say, it's kind of constrained in terms of design also, and in terms of the way certain design decisions are being taken on the architecture side of things. But zero knowledge allows you that flexibility where you can get, let's say, the next 100 million, or maybe let's say, who knows, 500 million users on Ethereum and help it scale. And I think there are a few other teams also trying to do that. And we feel like with the amount of aggression and the amount of focus we are trying to do, we want to ensure that zero knowledge is the next big thing in our plate, and that's where our focus is. And that's why one of the major reasons why we have this zero knowledge thesis around zero knowledge, and the reason why we committed is majorly on that. And not just that, we also want to focus more on the zero knowledge EVM compatibility side of things, because one thing we have realized is when there is this EVM compatibility, a lot of this developer tooling user experience is kind of really amazing in that sense, and it's much easier for, let's say, developers also to port stuff. So yeah, I think this is what I want to leave with you with. Thank you. I'll just probably pause. Yeah.
Yeah, thanks, Sanket. That was really helpful. Thanks for going over that. It's amazing to see how the network has grown. And I'm personally super excited about Polygon Studios, just, with everything going on with NFT and gaming. So appreciate that overview. Let's why don't we jump on into the panel here? Start talking maybe about some institutional embracement of DeFi and the technology. Let's see here. Maybe the best thing to do would be, Hart, if you want to, and then we'll jump over through. Again, I'm just going left right on my screen here. Like, maybe just talk about, I know you gave an overview of UMA, but maybe like what has been your experience with institutions? Have you had them approach you, or are you guys just kind of putting it out there and letting those who want to build around it?
Yeah, it's actually a great question, Ryan, because I did work at Goldman for 8 years, and Ajay, I guess we did overlap. We could talk about that too. And one of my experiences, yeah, one of my experiences of being at the bank for that long is just how slow technology gets adopted in traditional finance. And I've actually long held the view, because of effectively what UMA is writing is a contracting language where you can write structured products, financial contracts, derivative-like things, actually really useful things for traditional finance. But I've long been of the opinion that it's going to be very, very slow for institutions to adopt this. That may have changed though. So if in 2019 you were trying to sell DeFi to a bank, or 2020, you were wasting your time. But I will actually say, maybe as a starting point, when you have the kind of growth that you've had in decentralized finance, now all the smartest people I know at banks or in TradFi really do think that DeFi may very well be the future of finance, and they are deeply interested. So I want to hear from the rest of the panel too, but I think we might have hit an inflection point where institutional involvement now actually could make sense.
Yeah, I think I think we're definitely at that chasm, and it still feels pretty early, like I'm sure to us, but you can't help but notice that adoption curve that we're starting to see. So hey, Greg, how about you? How have you seen? I know you talked about the tokenization of real world assets. That's kind of what you're working on now. How has that process worked with institutions, and how have you seen their willingness to kind of be open to conversations and to adopt the technology? How have you seen that progress?
Yeah. So interestingly, there's actually no tokenization involved in what we do. Tokens are just wrappers you can throw around assets, and when the consensus around the ownership of that asset is developed in the real world and not on the blockchain, there's actually no point of a token. So what we do is we use, at least in the current model, Delaware statutory trust to look out for the interest of the maker holders. So the way that the process works is the maker holders will onboard a new vault type. That vault will send DAI to a regulated broker dealer, who will then send that DAI to a trust, which is managed by a trustee. And in order to make any material changes to the facility, which is coded in a credit agreement, almost like a smart contract, the trustee will have to check the blockchain to see if the maker holders voted on it. And the trustee has a fiduciary duty to the trust. They have large balance sheets. They're regulated. They're generally banks. So and kind of to echo what Hart was indicating, any institution, their mentality is show me the money. they don't really care about what you have to say in theory or what it could be. They want to know that this exists today and it's an actual opportunity for them. Otherwise, they're never going to get it up their own internal chain. So for us, our big moment is going to be when we can basically take this internet money and have it materialize as US dollars in a bank account. And that should happen sometime in the next couple of weeks for our first client. So I think we're on a good track to getting these regulated legacy counterparties very interested in what we're doing because we're showing them the money.
Awesome. So we're pretty close to that. That's awesome. So I guess moving to Ave Arc, how do you see the intersection with institutions and the offering that you guys are providing and the adoption there?
Yeah. So I think we are taking a pretty direct approach to bringing institutions into DeFi, as in we see DeFi as market infrastructure or decentralized software that enables infrastructure for market participants to essentially engage in a variety of financial primitives. So instead of sort of hiding the complexity of DeFi and essentially saying, look, you deal with a bank account and then we'll deal with DeFi, we are saying no, let's not take that route. You interact with the protocol, with the governance, with all of the the Web3 experience of DeFi firsthand. And Ave Arc is essentially adding a layer of KYC and transaction monitoring on top of the core protocol. But the core idea there is to, of course, bring institutional liquidity. But more importantly than that, even more important is to sort of bring institutions into the DeFi and Web3 experience. And then also the governance of the DeFi, decentralized infrastructure that Aave, us and other DeFi protocols are building on Web3. So we are sort of taking a direct approach. It's more work, but it's quite important to enable access to all of the innovation that's happening in the Aave ecosystem and in the DeFi ecosystem for institutional users and participants.
That's really interesting. I'm curious. This was referenced by more than one of you around just like the governance aspect of it, right? Because we're getting to this really interesting intersection between decentralized governance and approving then institutional offerings, right? Which maybe in some people's eyes start to blur those lines. So for Ave, like how does governance play a role in this? And what was that process? How much of this was generated out of or facilitated by decentralized finance users participating in governments and deciding this is the way they want the protocol to go?
I mean, decentralization is pretty much core to what we do. So Ave Arc will also be governed by the same Aave governance as the rest of the protocol. So decentralized governance is essential. That's what makes DeFi, right? I mean, if the governance is not decentralized and a person or legal entity is essentially operating and making decisions, or a small group of people are essentially making all the decisions, technical or otherwise, then it's hardly, I think the word decentralized kind of goes away, and then you're dealing with what Hester Pierce called Dino. So we're not in that. We are a decentralized protocol. So Ave Arc will be governed entirely by Aave governance. There will be some restrictions or rather some privileges for whitelisters. So whitelisters are regulated entities that KYC and onboard market participants. So they do need to have certain privileges to be able to continue to perform against their regulatory obligations. So for example, whitelisters may have a limited veto on governance proposals where, let's say, governance wants to. Now Aave supports multiple pools, right? So you can essentially the architecture of Aave, you can have multiple liquidity pools or multiple markets. Now, if one of the pools is governed by a whitelister, is governed by, my apology, it's essentially if a whitelister is or regulated entity is providing KYC and transaction monitoring on a liquidity pool, and governance makes a decision that doesn't necessarily help or enable the whitelisters to comply with their obligations, such as adding a privacy coin or something like that, then governance is still supreme, but the whitelister may essentially choose to leave the pool or essentially veto that suggestion. But in the end, governance makes all the final decisions, right? So decentralized governance is essential for DeFi, and that's what makes DeFi.
Yeah, amazing. I think it's really incredible how we're starting to build out, or we're starting to see these new primitives being built out, but still maintaining and staying true to the core nature of decentralized finance. I think that's going to be really important going forward. Greg, what about with vote? So correct me if I'm wrong here, please. But how is it decided what type of assets can be collateralized in the MakerDAO protocol? And is that a governance decision, or how does that work? And I guess, sorry, just to add on to that, what assets currently can be collateralized?
So yeah, everything in MakerDAO is a governance decision. The only way to upgrade anything in the protocol is through a Maker token holder vote. The way that we onboard collateral is through a process called Maker improvement proposals. And the specific proposal you would file is, we call them MIPS and for short, so a MIP 6. And the MIP 6 gives a conceptual green light by the community once it's passed. And then from there, it goes through various core units, which are the fundamental work teams in the DAO, to get properly onboarded and put into what we call a spell. Sorry, there's all these random maker words I have to throw in here, but we like to make up words. So it goes into what we call a spell, and that is voted on by the maker holders, and that puts it technically in the protocol. Now, you're probably familiar with a lot of the ERC20s that have been onboarded, and the way those work is that any user can come to the protocol, deposit that ERC20 into a vault, and generate DAI against it. For real world assets, it's a bit different, where you have to put in a specific address to that vault. And it's almost like a single user vault in that context, where the borrower submits their MIPS, they go through the process, and then at the end of onboarding, you're onboarding a specific address that they can draw the DAI to. And nobody else can use that vault because only that facility has the ability to pledge that specific collateral.
Got it. Okay. That's a very cool process. And you find the institutions are comfortable? How much work is it to get them comfortable? I mean, you talked about how to show them the money, but are they
an institution will never do this themselves? So that's why my company exists. We do that work for them.
I see.
We go through the maker holders. We go through
their normal workflows that they're used to working with, and their general kind of treasury management or asset management systems.
From my client's perspective, them and their boards see traditional loan documents. They don't even need to know that they're dealing with a DeFi protocol.
That's fascinating. I feel like that is a great segue into maybe, the next topic, which Hart would love to get your take on this. Just in general, the concept of, I'll call the DeFi mullet, but, consumer facing financial products that we know today, and how those might be plugged into DeFi protocols in the back end in the future, or, will it? Yeah. What do you think about that?
Yeah. So, I mean, Ryan, I think this is one of the most interesting questions to theorize on. Let's contextualize this. So we go back and we look at the Fintech revolution that has kind of happened in the last 10 years. What has happened? You've had traditional banks that owned financial services, banks, insurance companies, or whatever. Globally, they own financial services. The bank was your touch point to finance. Fintech has broken that in some meaningful ways, but not every way, right? So you now have Robinhood as in the US as a place to trade stocks. You have these neobanks in Europe, but not so much in the US. You have all these new entrants that have built now massive businesses using Fintech as a way to compete with traditional banking. What's happened here? You've had the traditional institutions buy some of these Fintech businesses or otherwise try to be more Fintech-y. They're not going away. They didn't die, but they definitely lost ground, right? And if you want to know kind of my default model for how DeFi will work, and I'd really be curious to hear Greg and Ajit's views on this too, but I think it's going to be kind of similar. where DeFi is this sort of existential technology or almost like movement that I think is going to break some of the traditional finance guys are going to lose some ground to entrants that are the touch point for the consumer, that are like Rob, like, and Ave could be a very good example of this. Like Ave could be a consumer touch point, but at the same time, I think you're also going to see other kind of like smarter traditional financial services providers plug into protocols like Ave or Uniswap or what have you as backend liquidity. So I don't know, Ajay, what do you think? Ajay, what do you think?
Yeah. So I mean, Stanley and I and Rebecca, we've been going around policy institutions and talking about Web3 infrastructure quite a bit. And one of the things, so we were speaking to the Bank of England, and one of the things that was really highlighted is this idea of systemic resilience, right? So resilience is a big topic. Hart, you and I both saw Lehman go down and Warren Buffett saved Goldman. So those are not fond memories for either of us. So, we don't want that to happen again, right? And then the way to address systemic resilience is to increase transparency and automation, right? And transparency is key to systemic risk, because if you don't know what's going on, then the system freezes. So with DeFi, I think the long-term vision is, look, we're just starting out. And, with this type of Web3 automated transparent infrastructure, we can create financial systems that are safer, more resilient, enable, lower cost. Deutsche Bank's cost to income ratio is what, 60-80%. I don't know what that number is, but it's very high. So if you can create market infrastructure that's vastly more efficient, improve systemic resilience, reduces cost for the consumer, and scales well, at some point scales well, right? I mean, if you look at Aave protocol, we've scaled to 25 billion now, 24 billion without actually we haven't had to do any code change for scalability. Sure, we used Polygon for lower gas fees, and that market has scaled very well in terms of consumer volumes, the consumer growth as well. So there are many, many reasons why DeFi makes sense from a policy perspective, right? And that's something, and that type of education is extremely important. So there is always, it's important that some of the DeFi community members have that revolutionary perspective, and without it, we wouldn't be here, right? But now, what has grown up institutional participation in DeFi look like? And by grown up, I mean, right, when we start to look at what the policy objectives are, what the various institutions of society are trying to achieve, and then how can this infrastructure, this technology, this whole Web3 public blockchain infrastructure that we're building, how can we address some of those challenges? So we've been doing a lot of work in the background and all of that. And to Hart's point and Gregory's points, so there are many ways to address this, right? So yes, fintechs will plug into this. Hedge funds, family offices, there's a whole bunch of proprietary money that's already in the protocols that are on this panel today. Now, when it comes to client money, right? When it comes to sort of asset managers and specifically not high net worth, but grandma's money. That's when I think we sort of have to really build, safeguards and things like we have to add a layer of KYC, but we also have to, improve the security around some of the infrastructure, improve practices and so on and so forth. So we've come a long way in DeFi in the last 2 years, right? We've come all the way where we have serious hedge funds already participating in this and serious proprietary money already in DeFi. Now, how do we go from there to client money and, retail money? And really at some point, the dream is to get pension funds, right? Because that's really responsible work. I mean, that's to handle somebody's pension is serious responsibility. So I think that's where we want to go, and that requires working with the regulators, policymakers, institutions. So the long horizon vision is that everything, right, the entire financial infrastructure, the back end of all of finance, runs on DeFi, and the front end can be mobile apps and fintechs and whatever else, right? That's already been built. So Chris Dixon tweeted about it today. So we're building the back end of all of finance, but that infrastructure has to be decentralized for resilience and for security and for all sorts of reasons. Sorry for this bit of a soapbox, but I think that's the long view.
Yeah, no, I appreciate that. I appreciate that definitely. And Hart, you like to get something to add there?
Well, I'm just going to say, like, I think you're seeing one extreme of it, what Greg is talking about, that there is going to be DeFi powering these loans and the bank board doesn't even know that it's DeFi powering these loans. So, I think that speaks to one extreme where you do have this plumbing. The future of finance is plumbed by DeFi. Like, everyone on this panel is going to say that that's true. But you're going to have some touch points or some intermediaries that don't even realize that. But this plumbing actually does have real significant advantages over the traditional system. And I'll just point, like, when Lehman went bankrupt, right? Like, it really is crazy because I was a relatively young guy, but I'm there on the trading floor on a Saturday, markets are closed, but our swaps desk, our interest rate swaps desk, has absolutely no idea what the risk is.
No idea.
No idea. And we're talking like they didn't know within $1 billion what their risk was. And Goldman Sachs is like, they're not, it's
the
crazy,
best
right?
bank in the world with the best risk systems in the world and no clue.
And they really were the best bank with the best risk systems. Our trading desk, like our rates traders were so good, and they just didn't know. And the guys like the regulators know that inability to track where all this risk was, like, that is bad, like capital B bad, right? And we do have, like, DeFi, blockchain, all this stuff really is a better system that eliminates those types of systemic risks. And so policymakers should love it.
I kind of like the fintech comparison too, just to make a drastic oversimplification. And I say it's an oversimplification because I'm going to use bank as a disambiguation rather than a proper term. But if you think about the way fintech gets developed, you have people that work at banks, they leave after like a decade and they try to build a business around the inefficiencies in the bank. The contrast with DeFi is, what if the inefficiency is the bank itself? And then you actually replace the bank with protocols. Yes. And frankly, that's why this technology is becoming more and more controversial.
Yes, that's such a good point. And it's not something that, anybody on the other side of that conversation wants to hear, right? Hey, the inefficiency actually isn't a technological limit. It's actually the way that you've constructed your processes, your functions, and you've built your organizations through, taping all of these acquisitions together and then trying to, use all their legacy systems. It's no wonder it takes so many days to execute transactions, or it's almost impossible to unwind the risk levels because there's so much of that going on. And I feel like what I learn a lot in talking with investment professionals and financial advisors, institutions, is that their questions are just like, how is this going to improve? Like, great, we get it, it's an improvement, but like, literally how? And so I try to use the example of like Robinhood in a way where it's like, if they were able to plug into liquidity from a protocol like Uniswap, right? Like, they may not have had issues in having to, cut buy orders off, or whatever they did do, earlier this year. And so I'm trying to think of other ways we can relate to people who maybe aren't as deep in the weeds as we might be.
But their issues and much of banks' issues are regulatory. These are rules that are imposed on them by people that have nothing to do with their business. So, I think the drive towards replacing these entities with protocols is that, not that people don't want to be subject to regulations, but there's a level of transparency that obviates the need for that kind of oversight.
So I think, Ryan, regulation is written for a previous era of technology, right? So the processes are built for spreadsheets, and processes are built for emails and, people getting on phone calls. And actually sometimes even paper checks and signatures. So I think that now we have better tech, right? So which is why it's quite important for DeFi as a community to start to educate, all the policy institutions and regulators and participants. And say, look, guys, there is a better way to do this. Sure, we have, a long way to go on the tech as well, but, just see what this looks like in 10 years, and maybe we can work together to make it a little bit better. So we've had quite a few, favorable conversations at least on the prudential side with regulators. And increasingly, a lot of regulators do see but we have to understand that they're not technologists, right? Regulators typically don't have a large technology budget. I mean, these are growing, but it's still a very paper auditor based world. And what do you do as a regulator most of the time? You just hire an auditor to go and knock on the door and check all the paperwork or query the database, run a sample test, put it on a spreadsheet, and it's a terrible state of technology out there in regulation and compliance. So I think there is some work to be done on that end, and once regulators start to see that there is better tech available and this is happening anyway, I think it becomes a much more productive conversation.
Right, Ryan, I do have a different example for you if you want one of ways to
I
talk
love
about
it.
this. So one of, I think, the real promises of what DeFi can do. Let's go back and talk about how derivatives work in traditional finance. Derivatives work, you like enter into a financial contract and you're going to move money back and forth between parties as the value of those derivatives change. And just think about that, the hedge fund that just blew up, Archegos, sorry, I don't even know how to pronounce it properly, but Archegos, like they blew up based on these derivative agreements. And if you think about how they work, those margin calls happen daily at best. You can only move money once a day. Like now let's think about that from the lens of like technology, internet, all this stuff. It's idiotic, like actually really dumb. And what blockchain system enables, because we can move money in smart contracts, we can progress towards a world where it's continuous real-time margining. Like you're actually moving money close to instantaneously. And this is like a really, really nerd way of looking at it, by the way. This is like talking about capital efficiency and all this other kind of stuff. But in this nerd context, there is a technological innovation here that is huge, where you don't have to lock up money or don't have to trust credit agreements. You can actually be collateralizing things correctly by moving money over this blockchain network. And like, that is the type of technology that can enable financial innovations and financial efficiencies. It can actually enable financial services that are available to people that don't have traditional credit. So we're now talking about like banking the unbanked or enabling like that type of concept is actually transformational for what financial services can do, because you're no longer limited to moving old school money through like old school pipes that update very slowly.
Yeah, it's the permissionless, like borderless, just real time markets that these are enabling, and you can audit their health in real time. Which, going back to your guys' experience, during the global financial crisis. I mean, what a game changer that would be if at any point in time we could have just ran a pulse on the market health, right? And it sounds too good to be true, sure, but I mean the data is all there, right? Every transaction is visible in a publicly viewable ledger. So, I think it's just a matter of educating, on that front. I'm curious how much from each panelist here, I'm curious, how much time do you spend, would you say, just educating, potential partners on this type of stuff, or is it not that much time?
We don't spend time. Sorry, go ahead, Howard.
No.
Yeah, we don't spend any time on business development. We're a decentralized protocol, so everything we do is typically either inbound. So there's a lot of interest in Aave. There's an extraordinary amount of interest in DeFi. So we get a lot of inbound, and I would say most of what we do is essentially education. And education is two ways. As in, we also learn a lot from the market participants we interact with. So we've had a quant fund come in and offer some really productive risk management ideas, which have helped improve the protocol. So a part of this is also to bring in a lot of talent that exists on trading floors. I mean, all three of us here came from investment banks. So there's a lot of talent in TradFi that I think if that comes to DeFi, then DeFi growth will accelerate. Now there are two anecdotes here. One is the chairman of Deutsche Börse 2 years ago, Stefan Leitner. He asked me in Morocco, the CSD event, why am I writing all of this code? As in, why am I paying people to write all of these smart contracts? for some of the for a DLT project. Why shouldn't this be open source, right? And here we go. So it is open source now. So it's getting open source very quickly. So so DeFi does solve a problem, a genuine problem, which is if you're going to have really open source, transparent market infrastructure, this is the way to build it. The second thing is, so the education also happens. I think what would really accelerate learn, and we have also been quite surprised, right? So we go to a few institutional meetings and we get a lot of inbound saying, can we do this session or so on? And a lot of folks already know a lot about, what's happening in DeFi, how the Aave protocol works and so on. So we've had quite a few pleasant surprises in talking to institutions about how much people already know. I think what would really help is, if people just started playing with DeFi, I mean, testnet, mainnet, whatever, get a MetaMask wallet, download, see it for yourself. It's a lot less scary than it might appear in, I have to, Web3, oh God, Ethereum. No, it's not that hard. It's actually pretty straightforward to use. The user experience of DeFi has come a long way, right? So I think we encourage people to just play with what's out there and either on the mainnet or the testnet and really experience what it is like for themselves.
Yeah, I think one of the main ways I find most people get comfortable with DeFi or really that light bulb turns on. And it's not just with DeFi, you see it with NFTs or really any kind of crypto technology or application. It's just by using it. And it's in a lot of cases, my experience, it's a lot simpler than what I expected going into it, because of all of these terms that no one's heard, right? Like MIPS and like terms that people haven't heard of. But when you break that down, you're like, oh, it's just a major improvement proposal, right? Like, it's like, okay, that's not a crazy concept and we can all wrap our heads around that. But when you hear governance and delegation and voting and proposals and acronyms, it does seem a bit overwhelming, for sure. But I agree with you. I think the UX side of things are improving, definitely. And as we get more consumer facing companies building on top of DeFi from the get-go, I think that's going to really improve a lot. I'd love to hear from Sanket, like from your guys' the foundation and really trying to foster growth in the ecosystems and stuff. Like, how are you guys working with new crypto applications? Is it mainly focused on Polygon? Are you helping educate on the broader ecosystem as well? And how's that working?
So I think in this case, I think there are two things here. Definitely, I think so. For us, one of the major good things is mainly like, as Ajit also mentioned regarding the BD side of things. So that's not much, because what has happening is with Ethereum gas prices so high, a lot of people are naturally trying to find a way, and what they try to look is something that is kind of live and work out of the box. So I think for us, mainly it's more on the network and the technical side of things, because if that is there, I think they don't even require some sort of our permission in that sense. And yeah, but so that's one part of the thing. And I think secondly, definitely it's on the education side. And when I say education, at least from our perspective, it's mainly on, let's say, trying to help them understand on what is scaling, like, or what are the trade-offs, or what is it that they are trying to do, because there are because I think people, in fact, I think in the industry also there are a lot of this contention in the sense of, let's say, how do you define, let's say, a scaling solution in that sense? What are that parameters, or what are the trade-offs? Because essentially when you try to scale certain things, what is there is a trade-off, like, but the important part is people should understand what the trade-off is. So and with the idea of this whole providing a suite of scaling solution, right? The idea is that exactly, like, let's say if someone is not okay with XYZ kind of trade-off, like for example, I'll give you an example, like with ZK rollups, right? The biggest problem right now with ZK rollups is the fact that it's not EVM compatible. And let's say if someone wants to port the whole thing, right? And I can give you an example. DYDX, who launched on Starkware, they took around 8 to 9 months to kind of do that, the whole process. But let's say something like Aave, who used on Polygon, right? It took, I think, less than a week or so. The trade-off which they were trying to do is basically they were trying to have more security, but that user experience and that seamlessness kind of went away. But with, let's say, with Aave, I think because our POS chain is not as secure as like something like a ZK rollup. So those kind of things, I think from our perspective, I think that is the main thing which you are trying to do, because let's say even institutions kind of have this issues, because when they try to do stuff day in day out, they also require the scaling thing. So I think from our perspective, that's the thing we are trying to solve on a higher level.
Yeah, it's amazing. It's really interesting to me. I'm obviously not on the side of building things at Bitwise. We do a lot of the education side and try to provide exposure to crypto assets for institutional investors, hedge funds, financial advisors. I think we talked earlier about, that our grandma who has their money with a financial advisor maybe wants to buy some crypto assets. And like, it's just so interesting to me to hear these different viewpoints as we're all kind of at different intersections in the industry. It's been fascinating just to see the growth, especially on the institutional side of things over the past, call it 6 months. And I'm really excited to see where things are going. So with the 2 minutes we have left, I would love to just hear from each of you. Like, what is it that you're most excited about that your protocol is doing, or what do you think the most exciting thing might be that we see coming down the pipeline as it relates to institutions in the future? And I can just jump in with Bitwise. Like, I think some kind of funds around or indexes around like the metaverse and gaming is going to be something that we're going to get a lot of demand for, and something really interesting to think about. So I'm excited to see how that'll unfold. But Hart, how about you? What's your take on that?
So interesting. I mean, I'm also worried too, Ryan. I'll say, like, I'm worried that we're going to have. I kind of hypothesized about $1 billion hack, and we had a $600 million hack in DeFi. Like, they're still early, so I want to emphasize that I think that we need to be careful on things. One of the things our protocol is working on is a concept of ensuring transactions. So ensuring specific transactions for their accuracy. This is sort of related to Oracle-like ideas, but with a different spin on it. So that's something I'm really excited about. And Bitwise, I also do want to say what you guys are doing in terms of creating index funds and making DeFi more accessible is really important and really useful. So, I'm very glad you guys are a bridge, a DeFi TradFi bridge, and I think or a crypto TradFi bridge, and I think that's really useful.
Yeah, amazing. It's what we're trying to do. So I appreciate that. Greg, how about you?
Can I get a repeat of the prompt? I got lost in Hart's answer.
Yes, no worries. I was just saying, what are you most excited about here as we look forward to?
I'm kind of, now that I've kind of taken a step back from actively being involved with a protocol, I think I'm most excited to see how other areas of the space catch up. Like, we've done a lot in DeFi, but in moving forward so fast, there's been a lot of gaps left in the rest of the decentralized stack. Like, I'm really interested to see where decentralized file storage and hosting end up, because I think that's a critical component of, and I saw somebody ask, like, how can I into Web3? It's like, go host everybody's front ends on our weave. You'll make a lot of friends. So, like, I'm interested to see how the rest of the stack catches up now that DeFi has made so much progress.
Yes, definitely. I think I saw an index by Index Coop earlier today. They're talking about like a data index. So I know we're at the end here, but Ajit, do you want to throw in your thoughts?
I'll be quick. So we're doing a lot of cool things apart from Arc. We also are doing a lot of work with NFTs as collateral in Ave. We're doing a lot of work on the social media stuff. On gaming. So Stanny has tweeted about some of this, right, already. But on the institutional side, once we deploy the core protocol and onboard, sufficient liquidity, then we have a lot of different ideas on improving capital efficiency, on, essentially margining and collateral management to improve liquidity, because right now, it's very hard to get uncollateralized loans in crypto, but that's not always going to be the case, right? And once we're done with what we're doing, hopefully there will not be a DeFi and a TradFi. There will only be, one Fi. And other than that, I would like to echo Art's words. So really, you guys at Bitwise are doing terrific work. Thank you for making this accessible to a lot of institutions, and of course, Polygon, I'm very excited about what's coming through in the ZK, ZK rollups world. So that should be phenomenal for what we're trying to do as well.
Yes, no, amazing. We really appreciate it, Bitwise. We appreciate what all of you are doing. It's really amazing work, and I'm sure so much of it is truly thankless, but we appreciate it. Thank you everybody for joining today. Thank you for all the attendees, and we hope to talk to you all again soon, but thanks for your time.
Thank you so much.
Thanks.
Thank you.
Thanks, Ryan.
Thanks.
Bye-bye.